So 2.1% growth for the second quarter. It's a step down from the 3% we saw first quarter, but still better than expected. How are you guys feeling about it?
Well, pretty good, actually. I mean, consumers were the hero. They had explosive economic growth, I guess, better than 4% at an annual rate. We lost some ground. We had an inventory correction, which took a point off. That probably bodes very well for the second half. We're seeing core CapEx orders really starting to steam up in May and June. That's great. Retail sales also May and June. That's awfully good. Look, I think, to keep this thing going in the face of severe monetary tightening in 2017 and 18, 7 rate hikes, I think it's almost a miracle that the economy is growing as rapidly as it is. It's growing faster, way above the prior trend line. And I think President Trump's policies of tax cuts and deregulation and energy opening and trade reform are having a huge impact. This has not been easy with 7 rate hikes.
So that may very well be true, Larry, but I think a lot of people would say it's a miracle that we're growing this fast given President Trump's trade policies. I mean, you call them reform. We saw it show up. Exports were down. That was a drag. Business investment was down. That was a drag. And you have to admit that that is weighing on parts of our economy.
Well, I don't think this trade factor is near as important as the monetary factor. I mean, the global economy is very slow. So that would help explain the slowdown in exports. So I get that. By the way, we have a USMCA NAFTA 2.0 treaty that's pending. If we get that through, it'll add a half a point of GDP per year with about 180,000 jobs. That's what our estimates and the International Trade Commission. So that's actually, from trade reform, going to be a huge growth factor. We're talking to China. Hopefully those talks will continue. Secretary Mnuchin, Ambassador Lighthizer, going to Shanghai, I believe, next week. That seems to be in play. We'll see if they're going to buy the kind of agriculture goods that we've asked them to buy and that they've suggested they would buy. That will all be very helpful. But no, look, getting trade barriers down is absolutely essential. That's President Trump's policy. And if they do, we have such a productive economy with low tax rates and regulations for business, we'll knock the cover off the ball in terms of exports. And so job creation, job creation is part of the consumer story. I don't know, people kind of forget that. Wages are rising, real disposable income rising, unemployment is low across the board. I mean, I think it's a pretty good picture, and I'm hoping monetary policy makes the shift that the markets are expecting.
Larry, the revisions to GDP that were lower for last year specifically, does it raise more concern about whether the tax cut gave us the broad macro payoff we were looking for?
Well, look, on the yearly basis, 2017, 2018, 2.7%. That's a pretty good number. It's almost 3. I know it falls short, but it's almost 3%. And again, we had to suffer through this severe monetary tightening. I went back and looked at the revisions the prior 8 years in the last administration, 1.9%. So we're growing at about a 42% faster pace than that trend line. So I think you can see the clear improvement going on. And also, let me just add to that, productivity numbers are now trending above 2%. That's a terrific thing. We haven't seen that in many, many years. So, no, I think we're in good shape. As again, we had a lot of monetary headwinds. Hopefully that's going to be remedied. But I think the economy is really poised for a strong second half as we cross over into the third quarter. As I said, with the durable goods report yesterday, core CapEx very strong the last 2 months. Retail sales very strong. That looks like we're going to pick up a lot of speed in the second half of this year.